From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming January 8th Forex session in the euro dollar pair. And as you can see, we've had an interesting session over the last 24 hours. This, of course, is the dreaded Sunday candle, but we basically dropped, found a bit of support at the 130 level, which, of course, would attract people because of the round number aspect of it, and we have bounced since then in order to form a hammer. Now, having said that, this is in and of itself a very bullish sign, but as you can see, and I have this clearly marked out already, there is a resistance band just above. So in reality, what you have is probably the next, say, 30 pips or so being quote unquote easy, and then after that you're going to run into real trouble. Whether or not we can break above the 131.50 is, of course, a question that can determine a lot of things. But even if we do, what I fear is that we break out and then we fall again and we form something like a shooting star up here, which of course is a very bearish sign. If that's the case, obviously it's a nice sell signal. All of that being said, this is a very bullish kind of turn of events here, but the euro is going to be easier to buy against other currencies. So what you may learn from this is what not to sell, because the euro is showing such strength. You look at the euro pound, it's up against a very thin resistance area forming a hammer, and then of course there's the hammer sitting at 115 in the euro yen. So perhaps this is a good lesson in learning when, yes, it's very likely that we could go higher in the currency pair, but this may underperform some of the other markets. So because of that, I'm not really keen to go long in this market right now. If we can get above the 133 level, I think we go higher, probably 135. There's a lot of noise between here and 135, so even that's not going to be the easiest trade in the world. Quite frankly, the euro dollar is probably going to frustrate people just as much in 2013 as it did in 2010 or 2012, excuse me, as it looks like we're setting up for some choppiness. All things being considered, though, if I was somebody who had to bet, I think we're probably going to go higher before we go lower. We're going to simply chop around and probably remain below 133. Since we're so close to there, to the beginning of this range, which I consider one big, thick resistance zone, quite frankly, I'm willing to kind of let this thing go until it's either going to prove me wrong, which is going to be closing above 133, or we show some type of resistance to start selling. From a longer term perspective, this market looks even more confused, so really this is about the only trade that I see.